Thank you very much, Astrid. Good evening, everybody. Hey, Eric, already saying good evening. Jeff, Mike, Lonnie, wonderful people from all over the world. Maastricht, USA, of course, UK. Here tonight. Oh, and Vancouver, look. And we are here tonight for Paul Correa's Beginner's Guide to Investment and Trading for Expats. Good evening to you, Paul. How are you from Fiduciary Wealth Management?
Very well, Carl. Great. And you?
Excellent. Well, yes, pretty good. But one of my ears keeps disappearing, and I apologise for that in advance if people have noticed that already. I don't know what to do about that, so I hope people will not take that. Will not be too concerned about that. But enough about my disappearing ear. We're here to find out from you about investing really and trading, and it's always good fun talking to you. Looking forward to a robust and interesting and possibly profitable conversation with you this evening. Can you fill us in on yourself and Fiduciary Wealth Management? What is it you do, and what does your firm do?
Yeah, the firm was founded in 2007. We are born out of the oldest law practice in Gibraltar called Isola's 1892. So yeah, born out of a law firm, and our business is all about serving the expatriate community and providing retirement planning, financial planning, tax planning, and cross-border financial planning advice. And we do relocation and a whole host of other services for wealthy retirees, entrepreneurs, and internationally mobile senior executives.
Brilliant.
We're also members of a global accountancy network, a top 20 global accountancy network, which is unusual for a wealth management practice to be admitted into an accountancy network, let alone one which is ranked 16th globally.
Why would that be?
I don't know.
They just like they like the cut of your jib and how you go about it, and have accepted you.
I don't know. They strangely accepted us in on the basis we do consultancy and tax planning advice. And yeah, it's great because it's a network that drives nearly 1 billion of revenues with offices in 300 locations, 100 countries, 10,000 professionals. So we've got legal roots and we've got accountancy roots, notwithstanding the fact that we are neither of those two professions.
Okay, brilliant.
But they sit very comfortably within our practice because I think we like to be different.
Yeah, well, certainly that. I've had some brilliant conversations with you. People who've caught us in the morning will have heard you giving particular tip-offs and tips about investing. And I think there'll be some of that tonight, won't there? I mean, we're going to do the theory and we're going to do the practice. And I'm going to report back on some of the results I've had from talking to you. Others might as well. So put those in the comments now in the chat, folks. If you picked up on some of the tips before, if you've changed your investing or trading habits as a result of hearing Paul speak before, do tell us what went on, and Paul can address that later on. And of course, any other questions. And I think we're in one of those situations, aren't we, Paul, where there are no silly questions. And it's like anything you were afraid to ask about investment and trading, it's safe to do so, right?
Absolutely. There can be no silly question. There can be a silly answer, right? So feel free to ask. It's comfortable. It's just a social chit chat. Yeah.
Okay.
So everyone's relaxed and.
Yeah, informal and open.
Informal and open. Yeah.
This is the precursor to our investment club. So there's been a lot of talk about that at Expats Portugal. And we are moving our way towards that, which will be a more exclusive membership-based thing. So see if you like how Paul operates, how he speaks, what he talks about and explains things. And we can take that a stage further and we can all start working together inside the long-awaited and much look forward to Expats Portugal Investment Club. So I've got a first question.
Yeah.
Ever since I was a kid, at the end of the news or during the news, it'll be, so let's have a quick look at the FTSE. And it's like everyone, I don't know, it's in the subconscious, it's in the conscious for some people, but it's there. And I don't know if how many people, we can't, it's a bit difficult to do a poll here, but how many people really understand what's going on there if you could wave your hands in the air, if you do actually understand what's going on there with that sort of thing. See a few people. And are there others like me who don't really know what it's about? It might as well be the astrology forecast. Oh, I'm on my own here. I shouldn't have done that. So, okay, my first. Oh, okay. Thank you very much, Snatty Phil, and Kimberly there, I think. All right. So what is going on there? What's being referred to when we're looking at the markets very briefly, or we're hearing about the markets on the news? What are they talking about, and what should we be looking for?
No, I'm glad you asked that question, and it hasn't been rehearsed, because I should have asked you to. We spoke about it briefly on Wednesday. And I think I mentioned that there would be a Federal Reserve Board meeting on that same day. And the news emanating from the US was two things. One, that they had brought forward the prospect of increasing rates. And rather than doing it in the first quarter of 2024, the guidance now indicates that the first rate increase will probably be Q4 2023, which is, it's 2.5 years away. It's like me telling you that I'm going on a diet 2.5 years from now. Does it really matter? No. But the markets, of course, have latched on to the really bad news that there's going to be a rate increase in 2020, end of 2023, rather than the beginning of 2024, which, frankly, if you look at the macroeconomic environment, one, there's so much uncertainty, we can't really predict so far out in the future. And two, I think there's still deflationary forces at play, which might delay that and take it further out. So, it's a non-issue, but the market seemed to be worried about the narrative. And, it's a non-issue. That's one. And then the second thing they said, which potentially could be more disruptive for financial markets, was that they would, we've been talking about quantitative easing, right? And they're doing right now 120 billion every month of printing of money. And what they do is they pump liquidity into the market, and then they buy US Treasury bills, whether it's 10-year Treasury bills, and they buy mortgage-backed securities. And they've said that they're going to cut back on the 120 billion, and they're going to discuss it, I think, at the next board meeting in August. I think 13 of the 18 board members of the Federal Reserve indicated that they were in favor of tapering the quantitative easing. Well, let's be honest, the market cannot afford to taper quantitative easing because the economy is still too fragile. Yes, there's an economic rebound, all agreed, but the market, it's questionable whether they can absorb, some tapering. And the thing is, it is quantitative easing which is keeping interest rates anchored at zero. If you don't do any quantitative easing and yields start rising higher, more debt servicing costs for central governments, more unemployment, companies which are struggling will have, it will lead into there'll be more expenses, interest expenses to pay, and companies which are not strong enough might fold. There could be more unemployment. The market would crash. I think this is what I would term as playing with the market, using words. And we've already seen it in 2018, I believe, with the so-called taper tantrum, when the Federal Reserve said, no, honestly, that's what they call it. The taper in the market. You can Google if you want, taper tantrum.
No, I get it.
Just Google it. And effectively what it was, they said, okay, we're going to taper, reduce the quantitative easing, the liquidity into the market. And the market said, no way, you're not going to do that. Doesn't make any sense. And within 2 weeks, the market had crashed and the Federal Reserve had backed down and continued doing quantitative easing, even at higher levels than the 2 weeks earlier, right?
Yes.
So the market can't afford to do it. I think it's just Powell and those cronies trying to manipulate the market. They want to keep the price of precious metals and industrial metals suppressed. They don't want inflationary pressures to keep stoking up. So by sending these signals to the market, it might just ease inflationary concerns a bit. But, if they really are serious about doing tapering, they need their head examined, because it's the market won't put up with that, because it's too fragile to sustain quantitative easing at this point when we need rates at zero. And put it another way, someone asked me this morning, does it make any sense? How come they they threw the kitchen sink at the problem during the pandemic with
Yeah.
no vaccines. They're prepared to, do whatever it took to ensure that the market didn't crash, the economy didn't, disintegrate. And now that we are rebounding slowly, but rebounding, they're going to let everything go within 2 months. Yeah. They
Yeah.
start tapering. It doesn't make any sense. It really doesn't make any sense. I don't think they're going to do either. I don't think they're going to increase rates in 2023. And I don't think they're doing any tapering anytime soon. But they're playing games with the market. That's all they're doing.
Okay, so you mentioned they have power. And as I understand it, they're an independent force. They're not part of the government, are they? They're a private company, I believe.
No, a central bank is supposed to be independent of governments, but in reality, in the last 12 years, since the global financial crisis, the central banks have become puppets of government. And, their policies are designed to support government policies. So I don't think you can't say anymore central banks are an independent from the government. They've become one and the same thing.
Well, this is a pretty electrifying start, Paul. A lot of context there about what's going on in the world of money. Setting the scene for us there. There is a connected question. Thanks to Margot for that. But I mean, going back to my original question was, at the end of the news, FTSE up or down, Dow Jones up or down, Hang Seng, whatever. I mean, is that just an indicative thing to make people be concerned or pleased with themselves and their portfolios? Because it's not a very useful indicator, isn't it? A bit like, if you're a Cancerian, you're going to meet somebody nice today.
It's
a bit more than that.
It's driven by trading volumes, by buys and sells, but there's so many variables, economic variables, statements by politicians, statements by central banks, inflation data, company news. Look, I'll give you a good example. I think it was, which is closer to home, to Portugal. Yeah. Was it last night or the night before when Portugal won their match? And during the press conference, Cristiano Ronaldo had some Cokes in front of him and pushed them to one side.
Yes, I'll do it for you. I'll reenact that now. I've got a bottle of red wine here for later. Move it to one side.
Exactly.
And is that likely to wipe a few euros off the value of Villarreal now, of the wine?
No, but it did wipe the value of Coca-Cola by a fair bit, surprisingly enough.
It was incredible, wasn't it? Incredible.
It's incredible. Absolutely. So there's so many different triggers that can influence the market up or down. Yes. So many. And of course, it's both at a macro level, macroeconomic, the market, the stock market, but it's also the micro level at the individual company level. Have they issued a dividend? Is there profit warning? Have they beat earnings expectations? So many different things can influence, sentiment on the price of gold and silver, sectors being in and out of favor. Should we be in growth or should we be in value stock? All kinds of different, variables have an impact on the market. So, yeah, it's a strange beast.
Clearly, we should be knowing a lot more and relying on a whole lot more data than just the ups and downs that are part of the bulletin. Okay, wiped 4 billion apparently off Coca-Cola in 2 hours.
Incredible,
according to Mike Campion. Thanks for that, Mike. The question connected to quantitative easing was a good one from Margot, and that was: do you think that the market is overvalued and there will be a correction to value-based stocks due to quantitative easing?
No, I think the market. I've been the advocate. I've been saying all along during the pandemic that the market is overvalued, considerably and certainly relative to history. It's trading at multiples which are never seen before, even during periods of strong growth. Mm-hmm. So in answer to your question, it's overvalued. Now, will we see a strong economic rebound in 2021 and possibly 22? Absolutely. Will that make trading market valuations a bit more reasonable? A bit more. But, whether is it sustainable medium to long term? No, I don't think so. I think it's, I keep repeating the same thing. I think it's the cocaine junkie, rather than going for cold turkey, they're giving them another fix, to keep it going because I think governments are between a rock and a hard place.
Yes.
And, there's no easy answer. So they're going for the easy option, right? short term rather than long term. And long term, you're right. I think it would be sensible and good if there was some kind of a correction. But for now, look, there's going to be a strong rebound this year. We've seen Q1 data coming through strongly on the back of, is it long lasting or is it back due to pent up demand because of the lockdowns? One never knows, but it seems we'll have a strong 2021, possibly 2022, but then someone has to pay for this. And as soon as you start raising taxes to pay for this, this is very negative for markets. And we've seen a G7 summit, I don't know, it was last week, and they're talking about, what are they saying? They're saying, they want to increase for the large multinationals, the corporate tax rate to a minimum of 15.
Yes.
Yeah, because someone has to pay for this. So, stock markets don't like this. Remember, more taxation means less revenues, which means that the multiples have to come down.
So interesting times ahead, whatever.
Absolutely.
And the art of, your art of managing people's money is seeing these things and ducking and diving according to those trends.
Yeah, the thing is, look, it's a very difficult market for us as a business.
Yeah.
Because investors want instant gratification, as we all do.
Yes.
in this world that we live, and no one is prepared to look at the longer term view and taking positions which are value based, and looking at the longer term when they'll give you the best returns. They want it here and now. You ask Warren Buffett whether it makes any sense to invest short term, and he would say no. And I believe that you have to go into, okay, there's some trading possibilities where you can take advantage, but you should try and look at the longer term and have the patience to wait for the opportunities to maximize your returns. This is not that you buy based on conviction and then just because you bought, the next day the market triples in value. And that's how some people think. And it's, my advice would be stay in cash.
Okay, so
stay in cash.
Nothing else tonight. You will be disabusing some people of that.
Yeah.
There. Okay, so lots of questions coming in. This is great. Thank you, everybody, and comments as well, which is good. Basic question. Actually, Mike, just going back to FTSEs and the markets, Mike understands those, the FTSE, etc. Yes, since moving out of engineering in 2016, I have traded indices, equities via ETFs, etc. You'll explain what those are in a minute, Paul. Haven't looked back since. I plan to move across to Portugal and would operate trade from Portugal. Would be interested in Paul's view and definition of trading and appropriate business structures. What is an ETF, first of all?
It's an exchange traded fund.
Okay.
So basically, it mimics an index or a sector. Could mimic a sector, say healthcare index, right? Okay. And rather than be passive, active investors like a fund, they are passive. They just track an index. So their embedded cost of managing that ETF is significantly lower than an actively managed fund with a fund manager, because it just tracks an index. So that's what it is. It's an index tracker.
And how do you feel about such approaches?
I think, sometimes index trackers can outperform badly managed funds, and there could be sectors that you can't find a fund, say semiconductors being one, or industrials and materials, and then I use ETFs. Nothing wrong with combining, between active and passive, active funds and passive ETFs.
To spread risk.
To spread risk and to find one which drives the returns, yeah.
All right, excellent. Thanks for that, Mike. Eric, now, basic question. Currently an extended bull market. If a bear comes, do you actually sell a volume of your equities and hold cash until the bull returns?
Yeah, or you can hug the bear, yeah?
Always an interesting answer.
Exactly. You can hack the bear. Look, very good question. Is it Mike said that?
No, this is Eric. So I'll say it again, so for everyone's benefit. Basic question. Currently an extended bull market. If a bear comes, do you actually sell a volume of your equities and hold cash until the bull returns?
Yeah, the question is whether you're in the bear market or not, because sometimes it's a massive decline or a number declines, huge market declines in consecutive days, and you can see it coming. But other times it's a trickle effect, and it means that it drops 3% today, goes up 1% tomorrow, 2% down the next day, 4% down the next day, 2% up, and it goes unnoticed. And before you look at it, it's gone down 20. So it's a difficult one to play. Look, if you feel the market is overvalued, you can take. And again, if you're looking at it as a trading, which is not my great belief, but I can understand. Then you say, okay, I take half of my investments off the table, keep the other half, run with the other half, and then wait to average down. Yeah, different ways of playing it, but yeah, it's a difficult one.
Okay, come back on that, Eric, if you will. Lonnie, just a nice bit of feedback for Expats Portugal for a moment. Just to let you know, after watching 84 of your programs, there should be an award for that. I'm finally arriving in Porto on July the 15th. Congratulations, parabéns on that. Your passion for Portugal is contagious, and Gilda has been a great help. Lovely to hear that feedback. Thank you very much, Lonnie. Jeff is saying very plainly here, I'll combine your two questions here, Jeff. The market will crash. It's a question of when, and I'm going to find out if Paul, if you agree with that stark analysis. And then on a slightly more or a less violent note, where are Portuguese shares traded, and can expats buy shares in Portuguese companies, and should they? So the first thing, I mean, straight up, Jeff saying, and this is what it's the elephant in the room. I mean, never mind about bulls and bears. This is the elephant in the room, isn't it, of trading? The market will crash. It's a question of when. Do you agree with that analysis?
I wouldn't disagree, but it's very difficult. Look, for someone where we positioned ourselves very, very conservatively during the pandemic, our strategy hasn't worked last year, right? Because we were, logic dictates that the market needed to correct and quite significantly. Yeah. The problem is that markets are no longer free markets. They are manipulated markets. Right. So in answer to our listener, he's right that the market should have corrected probably last year. This year, I don't know, because we're seeing a strong rebound. Whether the rebound is long lasting or just a blip remains to be seen. Where, it depends on the amount of stimulus and whether, people use all the cash that they've been holding during this lockdown and start spending, and whether consumer spending keeps the momentum going, and the unlocking will drive the economy higher. So difficult one to say. I think the market has priced in 3 years of earnings, and it could go either way. It's a difficult one, but he's right. Logic would dictate that this market is too long in the tooth and requires a correction of some sort.
Well, it's interesting you use the correction rather than crash there. I mean, it's basically a crash, a very chaotic correction.
Look, I think if quantitative easing was stopped, not tapered, stopped, and all the other stimulus that is going into the market, if there wasn't this degree of market intervention, then the market would have crashed. Yeah. I totally agree. But because there's so much intervention, I don't think governments, remember that these people have short mandates, yeah? They want to make sure they want to have two terms if they can. They're not going to let the market crash now. They would have done.
Yeah, not on their watch. Okay,
not on their watch.
It's a matter of kicking it down the street, if possible.
But I'll tell you something. It is proven over time that markets, with excessive debt and so much liquidity pumped in, they over the long term they don't drive, and overvalued markets, result in lower returns over the next 10 years. So it will have an impact on investment returns.
Okay. Another part of his question then, where are Portuguese shares traded, and can expats buy shares in Portuguese companies, and should they? So is there a Portuguese exchange?
Yes, there's a Portuguese stock exchange, and one can buy shares in through any broker.
The reason it's a matter of scale, then, is it? It's, the reason the big markets and the well-known markets are big and well-known is because they're huge and they have they're vast.
But I think Portugal has a market which has good liquidity and good trading volumes. Okay, I mean, it depends what you're buying, but if you're buying the top Portuguese companies, I don't see there being any issue trading.
Yeah. Okay. Okay, Jeff, come back on that, if you will, in the chat. Leslie says, we're moving from the US to Portugal. I think this is more of a wealth management thing. Do you know if there is a requirement that we move our trading and investment accounts to a company that has European-based offices? Do you know the answer to that, Paul?
No, I don't.
I mean, I think this falls under the current and somewhat alarming proposition. I think that if you have any kind of business interest in Portugal, you should appoint a fiscal representative in Portugal. That's how I'm going to answer that for now. Others may want to have a go at that as well.
I would say it makes sense if you're moving to a foreign country that your assets are tax efficient in that country. That's certainly the advice that we give our clients. Yeah, that's normal. Whether it's I don't think it's a legal requirement. No, I'd be surprised, but I'm not, an expert in that field to make statements which I'm not 100% sure about. Maybe Gilda and associated tax advisors can answer, but I'd be surprised if it's a requirement.
Okay, but the advice is to consider moving to representation where you're going to be living.
It makes sense that you structure things tax efficiently from a Portuguese perspective, yeah. Absolutely. But that doesn't mean that the assets have to be cited in Portugal.
Get the advice is the first thing there, Leslie.
Get the advice, yeah.
Charlotte is asking, why has the dollar gone down so much against the euro since last March, Paul? And do you foresee it getting stronger in the near future?
It's a very difficult question. It depends on whether the Federal Reserve allows U.S. interest rates, the yield curve, to steepen or not. If it does, then the dollar will strengthen. I doubt that very much. I think it's weakened considerably over the last 15 months because of the amount of quantitative easing that they've done and the level of debt. I think there's 3 new stimulus packages happening very soon, another 6 trillion of debt. And, every time you increase the mountain of debt, you're effectively devaluing your currency, right? So the more debt you issue, the weaker your currency becomes, because it's no longer a scarce commodity, right? If you have an oversupply of any commodity, of any good or service, the price will fall, right? And if you have too many dollars, then or too much debt, too much quantitative easing, too many dollars in the system, then the value of the dollar will weaken. So it's not surprising. I think I'm surprised it's held steady in the last few months. And if I was a betting man and the US continues borrowing at this rate, then one would reasonably expect to see the dollar weakening quite significantly over the next couple of years.
Yes. Interesting you make the distinction there, because a lot of people think trading and investment is betting. You don't see yourself as a betting man, probably more of a considered and measured man over the long term.
Absolutely, because there's traders that are going in the market and using technical analysis to see short-term movements in the market.
Yeah.
Fine, they are traders. I just don't believe that we have the resources to be able to be trading in and out for clients, because, that's not what we do. We're looking at longer term investments where we have a conviction view and think that they can, and long term could be just 2 years, it could be 1 year, but certainly, we are not into trading, buying and selling all the time. That's not our business.
Okay, good to know. Good to know. All right, Jeff had a similar question to Leslie there, and we'll go with the same answer there. Yeah, get the best advice in Portugal, and then see what you need to do regarding your accounts, Jeff and Leslie there. Jeff makes a good comment here. One thing that intrigues me is a disconnect between a company's performance and its share price. I know enough about it to agree with Jeff that you think, okay, it looks like they've had a bad year, but still the share price is okay, or vice versa.
Sometimes there's no sense in these things. It's as simple as that. But very often they are looking. The market is always looking forward, right?
Yeah.
You might have a bad year in terms of results, but the forward earnings guidance is very positive.
Yes.
So the market is ignoring the news and looking further down the road, yeah, and saying it's not good now, but the earnings guidance that the company is giving, and we think, provided they believe that it's genuine and that they can hit those earnings targets, then the market may well hold the value of the stock, notwithstanding the fact that they've had a bad year. All kinds of variables can influence the price of a stock.
Yeah.
And it could just be sentiment. What do you call it? The Robin Hood traders, that they go in and they start manipulating the price of Bitcoin and different assets just because they, and if there's enough momentum there, then it can drive the price of an asset. Even companies that are almost in liquidation, yeah, and the Robinhood traders come in and pump the price up. Is there any logic? No, but there's enough money flow, and buyers are driving it to new levels, but it doesn't make sense.
There you go, Jeff. Andrew Gilchrist, good evening to you. Confidence is the key to market stability, and who can predict at this time? I mean, yes, I mean, that's a good point, isn't it, from Andrew Gilchrist? Who can predict anything at this time? Would you say for you, I mean, historically, this has been the most challenging of all years you've ever been in your profession?
Absolutely, 100%. It's been the most stressful, it's been the most difficult, because, if you base your advice on reasoned arguments and on facts, yeah, on on macroeconomic conditions, on other factors which normally drive the market, then you've always been pretty safe. But we've seen the markets being manipulated to such an extent that you can't give any advice, because you don't know whether, even when you're being sensible and giving the right advice, if you've got, governments behind it driving the market in a given direction, you can never win.
However,
it's been very difficult. Very difficult.
I get that. However, I'm going to say that I'm learning a little bit about your strategy as a man and as a company, and you're going to the good ones, aren't you? The precious metals, and of course the future that we really hope for and that is required for mankind, if you like, and the investment in renewables. But we'll come back to your strategy in a little while. Maybe a few tips we could eke out of you tonight as well.
Yeah. I've got 15 shares here. I'll share 3. I'll be generous and I'll share 3 with you.
You've got 15 and you're going to share 3.
Yeah, you have to be a scarce commodity to drive the price higher. Yeah,
you're driving up value already. I see what you did there. Very good. Okay, Cynthia, this is a great question. What is the long-term strength of the dollar? Because there's a few doom mongers and naysayers around, aren't they? So the dollar hasn't got a future, aren't they? Hold assets, cash in US dollars or euros. What would you say, dollars or euros?
It's a difficult one. It's between the rock. The euro. I want to not make any comments out of place, but
it's not like you.
It's not like me exactly. But the euro, I think, is I think the EU project is a doomed project. I think, but will the euro hold its value more than the dollar? It depends on how much debt is issued and how the economy is rebound. But I reckon the dollar is measuring on based on the amount of debt that they're issuing and the amount of debt that they have, based on the quantity of easing that they're carrying out every month, and then using other measures to look at long-term fair exchange rates. So there's one called purchasing power parities, PPP, and a purchasing power parity is a basket of goods in Europe and the same basket of goods in the US, exactly the same items, same brands, same everything. What is the value? What is the cost of that basket of goods in the supermarket in US and the same basket in Europe? Divide the price one by the other and you get the long-term fair value between exchange rates. That's one way of doing it. The less sophisticated way of doing it, they call it the McDonald's index or something like that, which is the price of a McDonald's in the US compared to one in Europe.
Okay.
And that gives you a fair exchange rate. Look, I'd rather use the more sophisticated version, which is the purchasing power parity. But it does throw some, ranges.
It's not a bad guide, is it? And Warren Buffett starts the day with a hamburger from McDonald's every day, I believe, as well. So that's what he's doing there.
Well, could be. But it gives you an indication. But in answer to your question, I think the dollar may well, provided there's no surprises and they increase rates, which I think is, the probability is extremely low. So long as there's no, so long as rates are anchored at 0 in the US, then all other things being equal, yes, I think the dollar will probably lose value against a basket of major currencies.
Okay, all right. So, and this is a big issue, obviously, given the community and constituency we're talking about here. This is people who have their money most likely in US dollars, unless they've diversified already in some way, and they are coming to Europe. Okay, so it is a very serious question, and it's a very dynamic, exciting, dramatic conversation to be having as well, given the uncertainty we're talking about in the world. And of course, people should be thinking about things other than cash, of course. If you're coming here with your dollars to Portugal and you're entering a euro world, you issued a rather, well, not very veiled concern about the European project, I think you called it there.
Yeah.
So is that a good indication to get out of cash as much as possible and make different kinds of investments then with your US dollars that might have been turned into euros, or not turn them into euros at all?
I think there's so much uncertainty. I think one needs to spread their currency as widely as possible. Yeah.
Right.
So some dollars, some euros, some sterling, and then some hard assets which will increase in value.
Yeah.
Over time. But certainly, even if you're American, if the intention is to spend more time in Europe and that becomes your base currency, then it would make sense to divest a bit from dollars. Yeah.
Yes, indeed. Okay. And
because,
sorry, go on.
No, because the purchasing power of your dollars might decrease over time. Yeah.
Yeah. Okay. And the really fascinating thing tonight, Paul, is nobody has mentioned cryptocurrency or Bitcoin yet. I wonder why that might be, given where we are this side of the Bitcoin market compared to how it was maybe when we last spoke. Could that be something to do with it?
It's interesting, but look, we've had what's his name, Elon Musk, making comments. He's buying crypto, he's stopping crypto, he's driving the market. But look, the market in crypto is very expensive, even relative. One Bitcoin to I don't know what ounces of gold is just at ridiculous levels. So, if I think one of our listeners today said about whether the stock market should crash. Well, what about Bitcoin? Yeah. What about Bitcoin? Because it's dropped in value, but the question is whether further declines are in store.
It's on the way back up, for sure. Okay, Nuno, comment from Nuno Mendes. Good evening to you, Nuno. The actual situation doesn't allow people to think in the long term when all are acting in the short term. That is a problem, isn't it? It turns the market overpriced, and when people aren't planning, they just play, and losses are a question of time. And remember, money value doesn't disappear; it just changes hands. That's a wise view, isn't it? You've got to make sure it's your hands.
Yeah.
Yeah, indeed. Okay, good comment from Kevin as well, or a good question. This is a nitty-gritty question, basically. If investing in the markets for the long term, say 10 years, thank you for this, Kevin, and you want an annual return, what rate might you expect safely?
I mean, I can't give a return. That would be misleading on my part to give a return. I think
the emphasis is on expect there, and people will obviously.
Yeah, I think you have to. It's interesting because I've just rolled out a share portfolio, and I'm going to talk about 3, which is a new product I'm rolling out, identifying 2 types of stocks. One where there's deep value, so the share price is discounted to its book value, to its intrinsic value. Yeah. So it says that the market valuation is below its true value. So there's a discount. Yeah. It's like buying £100 of grocery at £70. So it's discounted. So there's deep value. That's the Warren Buffett approach. And then combining that with some stock which have hyper growth opportunities. And so that is the share portfolio that I've just built of 15 stocks, and telling investors, look, this you need to ring fence from your normal investments, and these are higher risk, but they can drive really good returns. And I'll cover 1 or 2 whether the returns could be incredibly high. Mm-hmm. And leaving aside this, another way of approaching it is finding dividend stock. Yeah.
Yeah.
I'm building a portfolio which pay handsome dividends, and you say, look, I'm thinking long term, but in the meantime, I'll just get the dividends, and the dividends are phenomenal. Firms like Aviva in the UK, M&G in the UK, L&G, Tesco in the UK paying phenomenal dividends. Rio Tinto, which is a commodities mining firm, quoted in the FTSE 100, in the Nasdaq, I think maybe. It's a global, I don't know what's the market cap, I'll tell you, Give me a second and I'll tell you.
While you're doing that, I can tell everybody that the lightning reaction to a popular demand here. Astrid, thanks, Astrid, for setting up a forum topic on investments and trading, as everybody's been asking for, or many people have been asking for tonight. Thanks, Astrid, for doing that. So make sure you get there to expatsportugal.com/community. Go on, market cap.
Yeah, 101 billion. I mean, it's a massive firm. It's paying an indicative gross yield of 5.59. It has a fantastic dividend track record of dividend consistency. It generates free cash flow of £5.99 a share, which is phenomenal. So it's cash rich. It's sitting on a cash pile. Will probably continue paying dividends, and there's still upside potential in the stock. So, did
you already give the name of that, or are you just teasing us with?
No, Rio Tinto.
Oh, Rio Tinto, you were talking about that.
Rio Tinto.
With market cap, then, I mean, we preface this by saying there are no silly questions. Market cap is the amount of money in that particular sector that they stand to be involved with. Is that what that means?
No, it's the valuation of the company based on the number of outstanding shares in the market and the price per share.
Okay.
So it is what the market is valuing the company at.
Okay. So, but it is a forecast. That is not a reality.
That is what the stock market is valuing the company at. If there's, say, 10 shares and each one is priced at 10 quid, then the market is putting a value on that company of £100. Yeah.
And that would be called its market cap.
Yeah. So the market cap right now for Rio Tinto, well, it was done a couple of days ago. It's 101 billion sterling.
Oh, wow. Okay.
So it's a mega company. So look, if you're going to go into Rio Tinto and companies like that, and then you can't sleep at night, don't go. But if you have the patience and maintain the long-term view, you can go into cracking companies, either deep value stock like Rio Tinto, which incidentally we talked about trading at a discount, to the market. Okay, Rio Tinto is not trading at a discount; it's trading at 3 times book value. But I can find other examples that are trading at a deep discount to its market value.
Very good. Sorry, Paul, as a correction, somebody did mention crypto now. That's Margot. Disinvestment from traditional safe havens and into crypto. How does Portugal view those types of holdings? What I can say about that, there is still no capital gains tax on crypto reward and benefit in Portugal yet. And I don't know whether that's because they haven't caught up or because they want to be a haven of that kind. It could be either or both, possibly. Many corrections. Paula knows a thing or two about this, I think. Many corrections. And I imagine you'll be a major contributor to that forum post that Astrid's just put up there, Paula. Be great to see more of your insight there. Many corrections have been called crashes, but a crash is something governments, especially the US, try to avoid. And I think on the world stage at the moment, it is a matter of national pride, isn't it? When with this current sort of G7 round and Biden meeting with Putin, a crash in the States would just be unthinkable, wouldn't it, on the world stage?
It's unsustainable. If the US stock market crashes, everything will crash. Yeah, there's no question about that.
Unthinkable. Okay, some love for you as well tonight. So Jeff saying Paul is one of the most sensible financial advisors that I've listened to. Can he recommend? He's buttering you up because he wants a bit of advice. Actually, can he recommend types of Portuguese companies to invest in? So I think some people want to come be expats in Portugal and do their bit in a way and bring some investment here and invest in real Portuguese companies. Can you help with that?
I would have to research it. It's not my market, but they can easily be researched. Yeah,
and it could be the subject of our investment club, of course, couldn't it? We
could discuss a few. Okay. Yeah.
All right. And again, nitty gritty question: how much does he charge for investment advice? Is it a fixed fee or is it a percentage?
It's a percentage of the value of the investment. Yeah.
Okay, so that's how it works. Dare you say that percentage, or is that negotiable?
No. It's 1% of the value of the investment per annum.
Okay, and Paula agrees with Jeff. Paul seems very sensible compared to many US financial advisors. So you're sounding like a European and measured advisor compared to some she's dealt with. And a little joke here, financial joke for those who would get this sort of thing. Should I start buying Dutch tulip bulbs yet?
I saw that. I saw that. Yeah.
All right.
Yeah.
Did you want to respond?
No, I won't. But it makes sense. Yeah, the comment made me laugh. Yeah.
All right. So we're 8:15. We're 3/4 of the way through our planned hour. It may be a bit more informal and a bit more Q&A, sort of almost face-to-face with you at 1:30. But we've got to get those 3 tips in, haven't we? And I'll weave a few questions and comments in. But come on, Paul, let's have the first of those then that you're looking at. People have edged forward to the front of their seats for this,
Okay, I'll give you... I'll try to mix them a bit because I think it would be good if you had some deep value stock and some growth stock. So let's start with value.
Before you do, I'd like to point out to everybody that this is not financial advice. This is not what you should be doing. These are just the thoughts of a very, as you've heard there, a sensible and considered investor that are being shared with you tonight.
Absolutely.
Okay.
So the first one I want to cover. Oh, I've lost it here. Oh,
he's playing with us again, isn't he? I think.
No.
I've got this real winner here. Oh, it's disappeared off the screen.
No,
can't give you that one.
Yeah, but the first one is Baidu.
Okay.
Now, Baidu, Baidu. That is the BA.
Yep.
I, D for Denmark, U for United. Baidu.
Oh, okay.
That is the #1 internet search engine in China, and it also holds a 56% ownership stake in IQIYE, IQIYE.
I thought you were going to say IKEA then. That would be a
win. That would be amazing, eh?
Yes, it would.
Internet and furniture, but and has a vast inventory of exclusive films, TV series, reality shows, including 250 original titles and rights to many of China's favorite shows. The company you could think of about Baidu as the Google of China and the Netflix of China all rolled into one, because Baidu is effectively the Google of China and IKEA is the Netflix of China. And because they hold the majority stake in IKEA, they kind of control that company too. So you can see the magnitude and the potential upside that the company has. The IKEA subscriber base and revenues are growing extremely strongly. And even though they're burning cash at quite a high rate, something like losses of 1.6 billion a year, but they're still sitting with it. They've got enough revenue to keep going. So in it, the price of Baidu has taken a bit of a hit in recent weeks and months, purely on the basis that they have a majority stake in IKEA, and IKEA is burning cash quite quickly. But they're not seeing the bigger picture. Look, when Amazon started, they were burning cash, right? Because it was all about growth, and they were prepared to burn cash to secure market share, knowing that eventually they get to profitability, pretty much like Facebook and all the others. That's the strategy, build the subscriber base, and then we'll turn profitable at some point.
Yeah.
But the company rapidly scaling across major markets, very strong brand, has 120 million subscribers, with a market value which is less than 10% of Netflix. This is IKEA, right? I know I'm talking about Baidu, but when you think about Baidu, you have to think about Baidu and IKEA because they're interlinked. Yeah. So it's got 120 million subscribers, which is almost 66% of Netflix subscribers, but the market value is only 1/10. So you can see how undervalued it is. And it puts the potential into perspective. Now, Baidu itself has been ramping up its revenues and earnings quite significantly. Its EBITDA, which for most of you, EBITDA stands for earnings before income tax deductions and allowances. Yeah, so it's before payment of tax. What was the earnings? Yeah, of the company. That is increasing at 50% year on year, which is massive. And it's also sitting on a huge cash pile of $12 billion, net of short and long-term debt. So effectively, the cash pile is much more than 12 billion. They could get the cash, pay all the short and long-term debt, so they would have zero borrowing and still have 12 billion of cash $12 billion of cash on the sidelines, yeah, to be able to fuel the growth plans. So massive company. The company intends to make intends to make very good use of its balance sheet to go into cloud computing, artificial intelligence, as you know, one of my favorite subjects, data centers, other infrastructure projects to exploit the opportunities which are rising out of China's rapid economic development. And more recently, the company has secured licensing to test self-driving passengers vehicles on designated roads, and it's developing its first cloud-to-edge artificial intelligence-powered chip. And yeah, so anything from voice recognition, facial recognition, hand gesture control, eye gesture detection is going into those areas as well. So it's not just Netflix and Google is going into artificial intelligence and cloud computing and cybersecurity. It's just diversified. It's a mega company.
And you might say as well, if it's in those areas, it would have the Chinese government on its side as well as a backer.
Well, I'm gonna go into NEO, which is backed by the Chinese government.
Yes, okay.
The financials of Beidou are tremendous. It includes free cash flow, which is expected to triple by 2024. So free cash flow right now is not generating any free cash flow that we know because the data is not available, but they expect the earnings to be such that by 2024, the 12 billion that I spoke to about earlier will be $60 billion and no debt in the book. So very strong financial position and in a market which is growing and a very big market, right? And we saw the shares fall by about 40%. There was a mass sell-off on the back of a hedge fund called ARK, which happened to have an exposure to Beidou, and they were forced to sell their holdings, and that drove the price really down. So it's trading off the year's highs, but there's incredible upside potential from here, up to 60% upside within the next 12 months, with a price target of $350 a share, which is back to the highs we saw earlier. Yeah.
And currently, I'm looking on the reference that I have, and it's up 16%, nearly 16.5% in 5 years. So if you'd gone in at that time, you'd be pretty pleased with yourself, wouldn't you?
Yeah, but some of them, look, if you go look at some of them, they've gone up, 8, 10, 12-fold in a couple of years. I haven't got the graph here for Beidou, unfortunately.
Okay, but that's good. Let's leave Beidou there for the time being. Then that's interesting. Beidou there, and the code for it is BIDU, Bravo India Delta Uniform. If you want to look that up, and that's caused a bit of a flurry in the chat and the comments. I think people approve of that, and someone's even put in a nice link to a report on that. If you want to call up the next one, Paul, I'll just cover a few.
Yeah, I think sticking to China.
Okay.
One which I think has incredible potential is NEO.
Right.
And we're sticking to the theme of a seismic shift to a greener, cleaner economy. Yeah, global economy. We've had the G7 meeting. It's on the politicians' agenda. We're going green. There's going to be subsidies. There's going to be, investment into a greener economy, net zero emissions, and so on. So NEO is a next generation car company. It designs and manufactures electrical vehicles using the latest technology in connectivity, autonomous driving, artificial intelligence, all rolled into one. As you rightly say, with the strong backing of the Chinese government, who have a 24% stake in the company. And, the company went public. The share price just shot up incredibly. I don't know by how much, but incredible. It was just one directional. And then they ran out of cash, yeah, because they didn't have enough cash. So the Chinese government came in to bail them out. So the Chinese government has a 24% stake. and which means, and it's no great surprise that we've seen recently the Chinese government giving the cold shoulder to Tesla, and making life a bit more tricky, because they've got a vested interest in making sure the price of NIO continues going up. We expect, actually, at this rate, we expect NIO to dislodge Tesla as the number one EV automaker in China in the very near future. But they're not just happy being in China; they have global domination in mind. Top line revenue growth is growing rapidly this year. First quarter sales beat analyst expectations. Even though it's still loss making, we expect the company to break even by 2023, which is around the corner. William Li, who's NIO's founder, chairman, chief executive, he's, as I said, obsessed with world domination, and he's recently expanded into Norway. Norway is, as you know, a very green country, not just in terms of, because it's a green country, but because they are all very clean,
environmentally conscious. Yeah.
Environmentally conscious, exactly. Those are the words. And they see this as a stepping stone into Europe, to promote their global brand. And the financial picture is improving dramatically. I think the only dark cloud hanging over the horizon is the lack of chip shortages globally, which is an issue.
That's what we need to invest in. Is the third one then, isn't it? In chips.
Yes, you have guessed correctly. The long-term outlook, you've guessed correctly. You're very, very smart, Carl.
You taught me everything I know, Paul. Come on.
You're sharp. But it's true. And the long-term outlook looks very good. I think the upside potential of the next 12 months is there's 40% upside easily. Look, it's not a widows and orphans, neither Beidou nor NIO. It is buy and hold and top up your positions, because this one is one, that 10 years from now, it's pretty much like saying, oh, I should have bought Apple, or I should have bought Oracle, or I should have bought Amazon when I did, but I didn't. Blah, blah, blah. You need to buy now, and you need to have a bit of the patience to take the long-term view, because they're going to be massive.
Put that in the comments. The one you should have bought. I mean, I wish I'd bought into EDP before I came to Portugal. Then I'd have felt like I was getting some value back from a share dividend from the massive bills they charged me. But any other near misses you've had? Let me know about those in the chat. Are you going to tell us about the third one for tonight, Paul?
Yes, I am. The only thing I forgot to mention. Sorry, because
what is NIO's nickname on the markets?
I haven't got it here with me. I think it could be NIO. It could be NIO.
Yeah, not to be confused with the NIO, the Bitcoin, the cryptocurrency, because there is a NIO crypto as well out there.
But I'll just tell you something on NIO. Sorry, I have to go back and forth, and I've lost a bit of data, which is
We've got fabulous comments coming in. People wondering what you think of the World Economic Forum. Perhaps we should get started on that.
But if I go back to the revenue projections for NIO, I think it's important to put it into perspective.
Yeah.
In 2018, they were driving revenues of 5 billion. 2019, it was 7.8 billion. Last year it was 16.3 billion. This year they expect 34.7 billion. 2022, they expect 55 billion. So between 2018 and 2022, the revenues would have increased fivefold.
Mm-hmm.
So that gives you some perspective. And look, the other thing is that the top line revenue is growing on a year-on-year basis at 202%.
Okay.
So even though the EBITDA is still loss-making, the company is loss-making, this will turn around. There is no question about it. Revenue growth at 202, you can see, from 5 billion to 55. By 2023, they are profitable. And then they'll take on from there. So get in early if you can.
We'll go to hands up questions in a moment, but we need to find out the third. We started off with Baidu, the Chinese search engine, stayed in China for NIO, the electric vehicle manufacturer, who are expanding into Norway with incredible returns that you might want to consider. I'll put it like that this evening, and we'll go to a third while you're finding that.
Yeah, the third one.
You got it. Okay, great.
Yeah, I mean, I bumped into a friend of mine who works for the largest car distributor locally, and he comes from a banking background. And funnily enough, I met him yesterday morning, and he said, "Oh, we are having some issues because of chip shortages, yeah, which are semiconductors and everything which goes with that, and which is very true. And that's why we're recommending Taiwan Semiconductors. I think the code could be TSMC. I don't know. Check it out. Okay. But it's called Taiwan Semiconductor Manufacturing Company. It is the world's largest and most valuable semiconductor manufacturer with 50% market share. It's currently untouchable due to its technological leadership. Sales revenues are in excess of 45 billion a year. 45 billion a year. The company makes over 10,000 products using more than 217 technologies for about 500 customers, including, some of the Fortune 500 companies, and including AMD, which is Advanced Micro Devices, another of our recommendations, Broadcom, NVIDIA, Qualcomm. It is very well positioned to benefit from the surge in demand for chips in a strong 5G market cycle. The current shortage of semiconductors is likely to persist until the company increases its output. And the company has recently announced, so it basically has very good secular growth prospects, and it is committed, and it's already announced that it's committed to spend as much as 100 billion in capex, in capital expenditure, over the next 3 years to increase production, because there's not enough supply. The demand is there, but there's no supply. So to address this demand supply imbalance, the plants cost about 15 billion. They have to construct the plant. It has a lead time of about 3 years to build them.
Wow.
And then they cost 15 billion to ramp up production. So they're investing 100 billion. So they can see, a firm of that size won't make decisions, capital expenditure decisions of 100 billion, without having done the research. They know there's a supply demand imbalance. They know the price will go further higher. The price of chips will go higher. And they are just, biding the time, investing, knowing the demand is there. We expect revenues and free cash flow generation to double over the next 5 years. The company has, again, an incredible balance sheet with a net cash position of 13 billion net of total debt. Again, like the other one I explained to you, pays back all its debts and still has another $13 billion in cash to fuel growth. So sufficient operating cash flow generation to finance capital expenditure. We expect the share price over the next 12 months to retest the highs we've seen in the of $142. Not quite sure what is trading today, but I think it's probably 20% down from those levels. But looking forward with the favorable tailwinds, a doubling of the share price within 4 to 5 years, it is a distinct possibility. Again, get in early. This is not a speculative trade. This is a company with almost a 60% market share in semiconductors, massive company, very profitable, no-brainer.
Okay, all right. In that category, all right.
No-brainer. And if I may let me just see the financial just quickly.
Sure.
Because I'd like to add a bit of spice.
So there you have Taiwan. Let's have a look. The proper name for it, the Taiwan Semiconductor Manufacturing Company Limited. Thank you, Lonnie. Thanks, everybody who's getting excited in the chat and the comments about that. There is a lot of excitement, quite a flurry and a buzz, I think, of investing energy going on there. There's a couple of issues that have come up, Paul, that I will put to you.
Okay, let me just go and find.
Oh, Lonnie, are these companies included in the 15 of the fund?
Yes, it is.
Okay.
Just to recap, it's again, I've Yeah, I seem to have lost some of the data, but the market cap of Taiwan Semiconductors is $615 billion.
Okay.
615 billion.
Mind-boggling numbers.
It pays a dividend yield of 1.5. So, which in this market, you take with and you give thanks to the Lord that it pays a dividend. Yeah, and it's revenue growth of top line revenue growth of 20% per annum, earnings growth of 33%, return of equity of 30%, and trading at a realistic price. I think the last price I had for Taiwan Semiconductors was $118, but that must be a few days old. I'm not sure what the price is now. Maybe someone in the forum can enlighten us all. But I think there's 20% potential, 12 months doubling of the price within 3 to 4 years easily.
And just like that, 119.58 is the current price.
Exactly.
Thank you very much, Lonnie. So some great folks in on the call tonight.
Yeah.
Very excited about what you're talking about, and a little bit of contention as well. I think there was a bit of a electric vehicles. The future is hydrogen. What do you make of that?
The space for hydrogen and the space for electrical vehicles.
Okay.
I think anything which is cleaner energy is going to be in demand.
Yeah. Okay. The problem, as I see it, says Jeff, is that China are at the front of BEVs, but they produce most of their electricity by coal-fired power stations. We are being the mugs, I think, is what Jeff is suggesting there. We've got some lovely other comments as well. The Singapore Noodle Index is another way of looking at that comparison. Around the world as well. And there's been a suggestion that it should possibly not be McDonald's, but it should be Portuguese wine. My problem with that is that I don't think Portuguese people allow the price of wine to go up. So it won't be a genuine, there'll be a national outcry and all sorts of problems. So I don't think I think we should drink Portuguese wine. I think Jerry suggested that it's quite a good method with investment is to stop worrying and drink Portuguese wine, which is another way of looking at things tonight. And thank you for that, Jerry. But yeah, Singapore Noodle Index and a possible Portuguese wine index to look at. Although I'm not
that is a market, really, the Portuguese wine market, which has so much potential, which is phenomenal.
And do you say that because of the research trips involved in that?
No, because I generally think that the problem with I looked at it as an investment 20, 30 years ago, and I've taken an interest, Alentejo wines, and I've been to some wine tasting many years ago in Évora, a wine called Incognito. Yeah. I think it was some Danish guys. Incredible wines in Portugal. The problem is production.
Yes.
They don't produce enough for the export markets. But I reckon, Portuguese wines are one of the best in the world, but they're not producing in sufficient volume to export it and then market it globally because, unbelievable wine in Portugal. Unbelievable.
That's right. But the other problem,
Spanish wines is being marketed globally, but not Portuguese wine. What a shame. What a shame.
The other downside, of course, will be that Portuguese people will barricade any ports that are trying to take Portuguese wine out of the country as well. They don't like to see it go. They don't like to see it leaving the country. And I understand why. So there is, you're absolutely right. There is a production issue.
It's gold. Yeah. It's the alternative to gold in Portugal. Those wines are amazing.
All right, brilliant. What a great note to nearly end on, because there was one other observational question I would like to put to you. How about pound sterling? Just going back to cash very briefly before we go to a hands up session and turn the recording off. How about pound sterling as a preferred currency? The pound has done well, considering how some people, again, were saying it was going to be an awful currency to be in after Brexit, right?
Yeah, because I think, they priced in all the bad news. And the news wasn't as bad, and I thought it was a bit overdone. Yeah. And I think I've spoken to some clients of mine, actually Portuguese, funnily enough, and we had this banter between the British wanted to get out of the EU, and he's now admitted I didn't expect the UK to have done so well post Brexit, and with the vaccine rollout and with everything. I think, you can't dampen our entrepreneurial spirit and our determination. So I think they priced worst case, and I think the UK has come back very strongly. and it will take some time because there's been pain, and there's going to be pain for a while longer. No question about that. That's the reality.
Yes.
But I think the pound may well rally. Maybe not now, but I think it has still some upside.
Yeah. Yeah. Okay. Very interesting on the pound. The other part of crypto and Bitcoin, beyond the hype or whatever you would call it of particular currencies, is the blockchain that's behind it. Have you been looking at the blockchain as an area for investment? Because I think that's very exciting personally. Is that of interest to you, or have you sort of put it in the same sort of area as Bitcoin?
No, I think it's completely different, and I think it's an interesting area, but one we've touched through our other investments rather than through Bitcoin, yeah, because it has specific technology which could do away with the middleman, and the way you can track transactions and so on. So it's fantastic technology, but I don't know enough to focus on that, exclusively.
Fair enough, Paul. We have worked you hard this evening. You've been amazing. A lot of insight, a lot of information, a lot of fun as ever. Talking to you, Paul Correa there of Fiduciary Wealth Management over there in Gibraltar. Thank you very much indeed.
It's a pleasure.
And we will pause the recording there and go to a hands up session. And really, folks, if you're seeing this on YouTube and the recording is ending, you need to become a premium member to ensure that you can get to talk to Paul in the hands up session afterwards. So I'm going to stop the recording now. The Zoom lady will speak to us. Cheers, Paul.